When we woke up this morning, we saw stocks were crashing lower. We look at the heat map, there was a sea of red out there. However, before stocks crash, this is likely going to happen. And were you able to spot the divergence today down here at the lows? Now today we had a lot of things going against the stock market. For instance, at 10 a.m. we had the ISM PMI numbers coming out. They came in at 48.7 and they forecasted 49.0. Well, if we come over here and look at the ISM, notice there are some key things we want to pay attention to. Orders across most product lines have decreased. Are we going to be seeing a recession in the near future? Also, tariffs continue to be unstable, with suppliers adding surcharges ranging from 2.6 to 50%. And tariffs continue to wreak havoc on planning and schedule activities. Well, speaking of tariffs continue to be unstable. Manufacturing contract for the 6th month in a row. However, early on this morning, there was a huge warning sign out here. We looked at the dollar index. Dollar index this morning was rocketing on the way up. If we actually look at the dollar index on an intraday chart, we can see when we woke up, the dollar index was going up. We had a little bit of a sell-off there and then continued to be able to recover that move up. However, with the dollar index going up, we also want to pay attention to the bond yields. Earlier on, the 10-year yield was spiking up, but notice 10-year yield actually closing with the wick on this candle. Then we come over and look at the precious metal gold. Gold is one heck of a rocket ship on the way up. You can see up and away. Gold making a new all-time high. Today, gold was up 83.1. However, it's not just gold on the move up. If we come over and look at silver also on the move up, but I do want to caution you, as we come over and look at this, notice the major MACD divergence we have. Silver, the MACD indicator peaked out in correlations with a high over here. Silver pushes up to a new high. The MACD indicator puts in a lower high. And then today we push up again and the MACD indicator is making even a lower high out here. Now, something we were talking about today on the live stream was on the 30-minute chart, looking at the SPY. On Friday, we gap lower. Today, we gap lower as well. And are we about to see at least one of these gaps filled before the markets come crashing down? Let me know your thoughts in the comment section down below. Earlier, the ISM report also mentioned tariffs, but this one move could give Trump a win on global tariffs and calm the bond markets. And we scroll down here real quick, and basically what it goes on to say is the U.S. Appeals Court basically said that Trump's tariffs were illegal. However, it happens there's a bipartisan bill ready to be passed. Republicans, Representative Greg said, and basically what that would go on to say is they're willing to put in a bill that codifies 10% global minimum tariffs, would bring a minimum of $300 billion in revenue. Because let's be honest with us, if the Supreme Court rules that Trump's tariffs are illegal, what is going to happen? Is the U.S. going to have to go back and repay all that money that we've already taken in? And if so, what is that going to do to the bond market? And that's what a lot of the freaking out today was all about. Even if you come over and look at the German DAX today, the German DAX suffering a pullback today, down 2.29%. However, when we come over and look at how the indices spread across the board today, the Dow was down 249 points. NASDAQ was down 175 points. S&P 500 down 44 points, with the Russell 2000 being down 1.27. Now, when we come over and look at advancing issues versus declining, we had 66.2% of issues declining on the day. Then as we come over and look at the sectors across the board, we only had one sector in the green, and that was healthcare. It was only up 0.07%. Now, after hours, we do see the markets popping up here just a bit, but I also want to bring your attention over here on the SPY. We had two anchored VWAPs. You can see that we sliced through the first one, and then we came right down and we sliced through the second one, but then we were able to regain that anchored VWAP that goes all the way back here from August 1st. Notice also on the Fibonacci retracements, we came right down to the 50% level, also right near this high volume node, which is exactly one of the areas we were talking about in Sunday's video. Now, we do have a large gaping gap above here, along with another gap. Now, look at the MACD indicator. As the market continued to make new highs, look at the highs in the MACD indicator. They were going lower and lower. And right now, we don't see any signs of the MACD indicator firming up. On the 4-hour chart, MACD indicator crossed to the downside. Then on the 30-minute chart, notice we had the MACD indicator start to curl up. Is this going to be the case where we see the MACD indicator cross? We see the market's turn come back down, either do an equal low or maybe even a lower low. And then the MACD indicator sets up some type of divergence. Now, speaking of divergences out here, if you guys were trading the S&P futures out here this morning, Notice right down here near the lows, do you guys see the divergence out here? The answer you guys probably have is no, and that is because you're not using this tool right here. Now for this divergence I'm going to show you, I'm going to be using Bookmap. If you guys want to check them out, there's a link in the description box down below. Use code Mike20. But notice as we're coming down towards the lows, and the bigger the bubble, the more aggression to the buy side if it's green, more aggression to the sell side if it's red. But pay attention down here to the cumulative volume delta. Now you might be able to get that on your trading platform, but notice the cumulative volume delta basically put in a low somewhere in the price point of about 63.80, 63.79. And then notice as we came down, we see that we're starting to make higher lows even while we saw a price making it down to around 63.72. Now, if we look at Bookmap, notice when that divergence took place, notice the time frame right here, 1150 to about 1152. Then as we come over and we look right here on the S&P futures, notice as we came down, we started to see a little bit of consolidation take place, but being able to use cumulative volume delta, you would have been able to spot the divergence ahead of time and potentially catch some of that move on the way back up. Now, as we come back over and we look at the 30-minute chart real quick, notice we were able to get back into the gap. We actually closed near the upper end of the real-time session hours, and we're not including the gap. But in terms of all the price action that took place, we closed almost at the very tippy top. Now, would not be the slightest bit surprised to see either tomorrow or the following day, we come all the way up here, potentially filling the gap at 644.98. Notice if the market is going to go into a crash, normally what we'll do, we'll pull back, the market will come back up, potentially set a lower high. And if we do get a lower high and the market turns back down, watch out. Things are probably going to get ugly out there. As we know, September is one of the worst months out here for stocks. Today, I had a massive tilt session, and thankfully, Apex is still having their 90% sale, which ends today. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, we come over and look at the weekly volume profiles with the 4-hour chart. Notice it's something we talked about on the live stream. Now, if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. But we had this A to B equals C to D pattern. Not only did we smash the 100% level, the 127, we made it all the way down to the 1618 extension. Also correlating right with the lows from a few weeks back, right within those wicks. So it's really no surprise the market started to bounce back. And earlier on, we were talking about how thin the volume profile structure was. Now we built out some of this, but this area right up in here is a huge minus development area, along with the structure breakdown point that is likely to come back and get tested anywhere from 64.59 to about 64.55. Now, as we start to look at the daily profiles on the 30-minute chart, notice today, not only did we make it to the P point last night, S1, S2, S3, the market was just ripping on the way down. But notice where a majority of the volume was built out within the profile today, and now we're above the upper edge. And that really brings to my attention this whole minus development area within the profile. And that's going to be anywhere from a ballpark of 64.46.5 up here to about 64.62.75. That is going to be a point of interest for me. Now, to see if we're going to get rejections out of that area, do we have any economic news for tomorrow? Well, tomorrow at 10 a.m., we have the JOLTS job openings along with the factory orders coming out. So let's see, will that be enough to propel stocks a little bit higher, or are we going to come crashing back a little bit lower? Coming over and look at the NASDAQ on the daily chart. You see, we had that gap on the way down. We have not yet completed the ABC pattern to the downside at 553.47. Notice we closed near the upper end of the range, but then I want to bring to your attention, just like we talked about with the SPY, notice the MACD indicator. Are the peaks in the indicator going higher or lower? Clearly see it's going lower. Now, unlike the S&P 500, we see the NASDAQ has already produced a lower high in this market. Now, the question is, can we come back and potentially fill those gaps that have been left behind? You can see the gap from today, and then here's the gap right above us from Friday. MACD indicator showing no signs of firming up yet. And then on the 30-minute chart, though, it does shift a bit. We did get a bullish cross of the MACD indicator. We did get within the gap. And then look at after hours, this blue horizontal line, you can see we're about halfway into the gap. So tomorrow, are we going to be able to go all the way up and fill the gap? Let me know your thoughts in the comment section down below. So unless we get back below value area high tomorrow, I want to keep focus on, can we go ahead and fill the gap? We fill the first gap, then can we get above this consolidation zone right down here? If so, then I want to target right here, the candle body, 574.62, and then the gap being filled. But I do want to warn you, if we start getting below value area high, watch out, point of control becomes a target. then value area low, and then we'll challenge the lows from the day and see if indeed there's any buyers out here. Now, when we come over, look at the NASDAQ futures real quick. Let's take a look at the weekly volume profiles. And this looks like a hot mess, but you can see we came all the way down, smashing the 100% level, also retargeting this prior low right over here. So it's really no surprise that the market started to bounce up. I'm going to clear the charts off just a bit. And notice we had a pretty substantial move off the lows. So far this week, we've had a 527 point range. Last week, the range was only 432 points. Now, I do want to go ahead and grab a Fibonacci retracement from the swing high all the way down here to the swing low. Notice today we breached the 38% retracement. Now the question is, are we about to hit the 50% fib level or maybe even the 61.8? I do like this high volume node right up here for a potential target, 23,477.75. Now, if we start to turn anywhere from this, this could actually set up another ABC pattern on the way down. Now we come over, look at the daily profiles on the 30-minute chart. Notice we had quite the push off the lows, and right now we're near the highs of the New York session. We're also above the area with the most amount of volume traded within the range. We're all the way above value area high, and I do want to caution you guys on that. Anytime we close outside of value, expect within the next 1 to 2 days, highly probable we will come back and revisit value area high, which comes in at 23,258.75. Also, not just the NASDAQ closing above value area high, but also the S&P 500 is also closing above value area high at 6428.00. Now, if you want to learn how this trade copier could have saved me from blowing up my Apex accounts, then you want to make sure to check out this next video right here.